Thank you for listening to the Real Estate Voice podcast. I'm Vernon R.E. Jones, managing broker, owner of Jones Homes, and for over 30 years, we have been serving the 7-county Denver metro area. 2022 predictions. We're going to delve into some of these predictions more in depth. But let's look at a quick snapshot of some of the immediate realities that we expect to happen in 2022. And this is based on the Realtor.com housing forecast. Suburbs, still the place to be. The pandemic shift continues to shift what Americans look for in a home. 1 in 5 homeowners looking to sell and move no longer need to live near their office. So you will find more people moving out into the suburbs. Affordability will remain a challenge. Home prices will rise probably at 2.9% year over year. So again, expect home prices to rise close to 3% year over year from 2021 to 2022. Rents will continue to outpace home prices. Rents are expected to go up 7.1%. Again, it is definitely better to buy than it is to rent. Mortgage rates are expected to rise by 3.6% by the end of 2022. Home sales will reach 16-year highs as more homes hit the for sale market. Yes, we're expecting more properties to come on the market. Let's talk about the for sale inventory. With homes selling and continue to do so quickly, inventory will remain limited. But we expect to see the market rebound from 2021 lows. Inventory is expected to grow on average at about 0.3% in 2022. While buyers have been eager in the last 2 years, sellers have been on and off. Largely because they're concerned about, well, if I'm selling, what am I going to be able to buy? If you're moving up or if you're moving down, always give us a call so we can look at the inventory for you. And then I also take sellers out, if they so wish, to kind of take a look at what's available to them prior to putting their homes on the market. A rising share of homeowners this fall reported planning to sell a home in the next 12 months. This again could signal an improvement in this trend that has been a major challenge for the housing market. With 28% of homeowners choosing not to sell, indicating that the reason for doing so is because they can't find a new home to buy. A pickup in inventory could be self-reinforcing, drawing out other potential sellers as they find homes to buy. Rising new construction will eventually feed into this positive trend as well, but first, builders' pipelines need to catch up to the usual balance of already completed versus under construction versus not yet started homes. Completed new homes have recently made up half their usual share of all new homes, while for sale homes have not yet started to catch up to what we need. In other words, new homes are in many cases are only a viable option if you can wait for the construction process to finish. Rents, like home prices, rents grew slower than is typical in the early part of the pandemic. In larger metropolitan areas with many jobs that remain remote, below average growth continued in 2021. At the same time, many secondary markets saw rent surge as remote workers took advantage of their flexibility to relocate and save on monthly housing costs. Nationwide, rent growth went from minimal to double-digit pace in 2021 as the U.S. made substantial progress against the pandemic. With the rental vacancy continuing near its historic lows during the pandemic, in which just 5.7 to 6.8% of rental housing units being vacant at any point. Historically, renters are also contending with limited supply and excess demand that leads to upward pressure on rents. In 2022, we expect this trend will continue and fuel rent growth. Rents are usually historically around 7% to 10% as far as vacancy rates. At a national level, Realtor.com forecasts rent growth to be 7.1% in the next 12 months, somewhat ahead of home price growth as rents continue to rebound from slower growth earlier in the pandemic. First-time home buyers? Well, first-time home buyers will need to be successful in 2022 if the housing market is going to see the home ownership rate climb again. In many respects, it will be an uphill journey, given the slightly better but still limited for sale inventory, high and rising prices and rising mortgage rates, all pushing monthly costs higher. A competitive labor market, however, should help offset some of the higher costs in the form of higher paychecks. Additionally, extended workplace flexibility may enable first-time homebuyers to explore more affordable housing markets that wouldn't be an option if a daily commute was expected. The sheer size of the population at or near typical first-time homebuyer age will mean plenty of potential from this group to impact the market in 2022. What will 2022 be like for home sellers? Well, homeowners who are ready to sell in 2022 are in a great position. Home prices are likely to notch a decade-long streak of annual gains early in the year, and the value of homes is at a record $34.9 trillion. Again, the value of all homes is at a record $34.9 trillion, according to Fed data as of mid-2021, and likely will continue higher with next week's release of new data, even as for sale inventory begins to grow, meaning some sellers will face competition, of course. Well-priced homes in good condition will continue to sell quickly in many markets and receive multiple offers. And for sellers who have owned their homes for a while, this will likely mean that they will walk away from the transaction with a healthy amount of cash. While surveys show that many sellers recognize the advantage they hold in the current housing market, other data shows that it's the challenge of buying that is holding some back. More than 25% of homeowners are choosing not to sell because of that issue. The sellers most poised to take advantage of this market are those who also do not need to buy immediately. Those ready to sell second or vacation homes, but with some offices opening back up even as other companies shift to indefinite remote work policies, homeowners in vacation markets may find a notably cooler market than prevailed in these areas in 2021, when vacation homes sales surged and surfaced unexpected vacation towns. How can sellers prepare? The first step for sellers will be to explore their options for selling, whether it's first-time home sale, you've done this before, but it's been a while. You may be surprised to find out there are more ways to sell your home than you imagined. Call me. We'll let you explore all the multiple options you have so that you can choose the one that's right for you. For many sellers, this is going to be listing their home with a broker, such as me, who can showcase your home on the market to a wide range of potential buyers, getting you the highest price. And finally, let's take a quick look at what the 2022 market will be like for investors. In 2022, investors will continue to see solid returns from their investments in the housing market. When home prices are expected to rise, existing owners are in good position, and rising rents are likely to entice investor buyers to continue to purchase homes, even as rising mortgage rates challenge potential returns. After an unusual 2020 in which more investors were sellers than buyers, 2021 saw investors buying homes at a greater rate than selling them in the spring, and this investor surge continued into the summer. If these homes are held for rent, 2022 will be an excellent opportunity to receive high yields, given the solid demand and projected rising rental prices. As always, I would tell my investor clients, talk to your tax accountant or tax attorney to see how selling a home that you've owned only 2 years or less will affect you, or owning a home 1 year less or less will affect you, because those tax implications are larger the shorter amount of time you hold the property. Fix and flip investors. It's been a very, very difficult few years for fix and flip investors. Although some returns have been good, there just has not been enough supply to provide for a larger fix and flip buyer pool. A lot of my fix and flip investors, I really have not been able to advise them to get into the fix and flip market over the last several years, because you're going to have to pay higher for a less return on average. But as the market shifts, that could change. But I don't expect it to change in 2022 majorly. Most pandemic-related eviction protections have expired, and a few remaining areas with limits in place have expiration dates in 2021 or early 2022. With protections expiring and many renters still behind on rent payments, an increasing share of landlords report considering eviction. Whether these landlords continue to hold and rent these homes or decide instead to get out of the investment business by selling their investment home remains to be seen. We're watching New York, Los Angeles, Chicago, and all other major metro areas in particular, where the share of landlords who are missing rent is 15, 12, and 18%, according to recent data from our Realtor.com network partner, Avail, who monitors such realities. Well, let's kind of talk about where Denver will be in our expectation. Denver is in the top 20 of expected areas of growth. And Colorado Springs actually is higher. Colorado Springs is expected to rise 10.3% year over year. And Denver, Aurora, Lakewood is expected to rise 6% year over year. So my thought is, that's a lot of information to call to you. But give us a call at 303-359-8218, and we can go over your particular situation regarding your particular area and what is good for you at this particular time, regardless if you're wanting to sell or if you're wanting to buy. We wish you a very nice and safe holiday season. Thank you for listening to the Real Estate Voice podcast. This is Vernon Jones. Again, you can call us at 303-359-8218. And as always, please be safe.